Hello and welcome to another My Home Loan Update, a free resource for all New Zealanders with anything to do with home loans. Visit www.myhomeloan.co.nz. In today's update, we're talking about mortgagee sales disputes on the rise in New Zealand. A mortgagee sale occurs when someone is no longer able to make their mortgage payments. The lending institution, called the mortgagee, is allowed to try and get the money back by selling off the property. This right is usually written up by the mortgagee contract everyone signs when obtaining a mortgage. A number of times, the person who lost the house has concerns about the way the bank conducted the sale and will register a complaint with the Banking Ombudsman Scheme. There has been a marked increase in the number of complaints made to the Banking Ombudsman Scheme. In 2011, there were 512 complaints and inquiries made about mortgage finance. 118 of these complaints were investigated by the Ombudsman. This is almost a 100% increase in complaints when compared to 2007. Investigations into mortgage complaints are now around 40% of the Ombudsman's workload. This increase in complaints is occurring even though the number of mortgagee sales has been decreasing. In 2008, the number of mortgagee sales was 420. Now the amount of mortgagee sales is only around 230. So the obvious question asked is, are banks acting ethically? Well, there are a number of different complaints relating to mortgagee sales that are received by the Ombudsman Scheme. Some of the most common complaints relate to people believing the bank did not get enough money for their home. These complaints include concerns that the bank used an inaccurate valuation which caused the house to be sold for less than it was worth, as well as wanting the bank to wait for a summer sale because housing prices rise in summer. One of the biggest shocks that a lot of people receive is when they discover the bank can actually sue them to recover any part of the mortgage the sale of the house didn't cover. For example, if your house sold for $250,000 but you owed $300,000 on your mortgage, the bank can sue you for the remaining $50,000. You are responsible for the amount left over on the mortgage after the bank has sold your house. Many people don't understand the process of a mortgagee sale and will view the bank acting unfairly even though the bank had a legal right to do what it did. Many people complain that the bank sold the property too quickly and resulted in a poor sale price. So quick cash, but is it fair cash? The low price for houses being sold through a mortgagee sale is usually a result of little or no advertising and the banks wanting a quick sale. The banks just want to sell the house to get their money back and are not concerned about running an advertising campaign to drum up interest in the property. Houses sold through mortgagee sales are often sold around 20% below market value. Many property investors have recognized that mortgagee sales offer a good opportunity to pick up a cheap property, although there are risks involved in buying a property in this way. When houses are sold at a mortgagee sale, people are not allowed to inspect the house, so it may end up buying a lot of problems. People also don't realize the bank is allowed to add the default fee to the debt held by a person. The bank can do this even when the mortgage ended because the house was sold by the bank. When people are about to lose a house to a mortgagee sale, they are distraught and sometimes quite angry. It is easy to point the finger at the bank because they are the ones selling your house. Although people are not happy with the price they got from the bank, most of the time the bank has acted legally. Banks typically know the rules governing mortgagee sales, so it can be difficult to make a complaint stick. Pressure often causes confusion for homeowners. When people are in danger of losing their home, they can be very distraught and confused. Often they may decide to avoid both lawyers and their bankers. They don't want to see a lawyer for help because they feel they can't afford the fees, and they don't want to talk to their banker because they don't have money for their mortgage. This results in a lack of communication between the banker and the house owner. If no one is talking to each other, then it's impossible to find solutions to the problem. Bank officials from Westpac state that many banks view mortgagee sales as a last resort and that it's important for the customer to come and talk to their banker when they're experiencing trouble. This will give the bank a chance to work with the homeowner to try and find ways to deal with their financial difficulties and avoid losing their home through a mortgagee sale. If people are concerned about a possible mortgagee sale of their home, the Banking Ombudsman Scheme has published a quick guide to mortgage sales. which will provide people with a lot of information. The guide will help you understand the process that happens when a bank wants to sell their home, as well as giving people information about how to protect themselves. The guide will also provide information regarding options to get out of a mortgagee sale. That's all for this update from My Home Loan. For more information about home loans and to get a free mortgage quote, visit www.myhomeloan.co.nz.